Right, with some key commentary. Let's also take a look at the impact of Trump's tariff policies, and the word coming in from Devina Mehra, who's the founder and CMD at First Global, talks about how we're now in an uncharted territory when it comes to this entire situation and how it's playing out. Also touches upon the sectors that she has a positive view on amid the severe global volatility. Let's go across and listen in.
We are in uncharted territory, and the whole point is that I do not know what problem is he trying to solve with the tariffs, because the US economy was almost at full employment anyway. The unemployment rate has been very low. So it's not as if that people are not getting work because the manufacturing is getting done elsewhere. So what is the problem that you will solve by putting the tariffs? And debt is a very vague thing, because if you really put brakes on the economy, which is what he's now doing between inflation. Already, I mean, even a month ago, inflation expectations in the US had gone up to 3.5%, and now for the medium term, and now I'm sure it might be higher whenever is the next number comes out. So you are doing something which is just shaking up the economy with no real payoff. I mean, the only reason right now the labor numbers are not looking that great is because of mass dodge, where you are firing people right, left, and
which
center.
he may quit soon when the job is done.
Yeah, and the tariffs themselves are not rational. I mean, they are just predicated on the trade deficit with the country, not the tariff barrier of the country. I was reading somewhere that Vietnam had some 5% average tariff, and they've been hit with some 47%. So, I mean, even if they bring that 5% to zero, how is that going to change the 47%?
But Devina, I mean, I understand that. And there are many, analogies there that this is like the 1920s Great Depression. We don't know whether recession is going to stall here. Is it going to lead to depression in the world? Very recent examples were 2008, 2020, when COVID hit. How different is it this time in terms of what the equity markets are doing?
So equity markets are not that predictable. As far as India is concerned, I do not think you are in high-risk territory. As far as the large, steady portfolio is concerned, small micro caps, it's another story. That's and my stance on this has not changed in I think almost 3 quarters now. So I've been saying exactly the same thing, that get into a steadier portfolio and get out of the frothy areas of the market. And I don't think there is a huge risk, because you had a whole decade of below normal returns in that 2010 to 20 decade, which was that you put in 100 rupees in 10 years, you get 230 rupees when fixed deposits would have given you 200. So that's what created this room for the post-COVID bull run. And still you are not way above the trend line or anything like that on any parameter. So that's the plus for India. So if you were waiting on the sidelines last few months saying correction hoga, then I'll invest. So it's time to be invested to the extent of your equity allocation, which should never be 100%. Again, my stance on this again remains unchanged, that no matter how young you are, etc., equity should never be 100% of your portfolio, but whatever is.
Well, that's the market outlook that we are expecting.
If you like this video, then like, share and subscribe to ET Now.